It's Fed Day, and that's why we have seen all these moves so far today ahead of the Fed, and obviously because a lot of things are going on around. So live analysis, your session as usual. Okay, so it's your time to let me know for any help you want. We can go through the markets together and any assets that you want. Until I do that, until I got any questions from you guys regarding any assets that you want me to cover, I will try to brief you up regarding what is expected today, tonight, to be more precise, from the Fed. So so let's do this. I'm gonna also share my screen. Sorry, Nakula, can you translate that? I cannot really help. I cannot really understand what you're saying. Hello, Thaban. Hello, welcome. So, let's do this. I will share my screen, obviously, on this safe haven demand of dollar, in which has broken earlier my immediate resistance area. Okay, 106.77, bridge 106.95, if I'm not mistaken, 92. So you can also slightly a breath below the 107 level. Is the daily chart, guys. Okay, this is the daily dollar index, and the reason why I'm presenting the daily picture. By the way, markets have just opened, right? The US, the New York just opened. That's why we might see a resumption of extension of some moves that has been seen since European and Asia session. But I would like to focus a bit on the dollar and the demand that we have seen for a second day in a row. The reason why I put the daily chart on is just because I wanted to show you the fact that my ranging market, the 1 month, more than 1 month to be more precise, ranging market has broken. Okay, has broken. So focus is back. Let me just focus has turned actually to 107. Let me zoom out. 107.35 territory. And if I zoom out, I would like also, I know that you might not be interested in a bit in the long term, but I really like to show that, because we are in a new month already. This is 1st of November, right? 1st of November. So the dollar and many other assets that we're gonna check later on together, they are at key psychological levels or key historical levels. So look at this beauty. This is the whole rally that we have seen since June. And currently, it's not a matter of breaking my range only or breaching the 107 level. It's also the fact that this coincides with the midpoint of the 2022 down leg. Okay, so that's a key level to be closely monitored, at least for the medium term. Okay, so there is in general, we've seen some boost on dollar. We have seen some boost on dollar yen. We have seen futures falling again, stock futures falling ahead of the Fed policy, even though the market just opened slightly higher. Okay, slightly higher. I'm gonna come to that in a bit. Yes, my dear Emmanuel, you are absolutely right. It opened slightly higher, even though the overall picture remains on the downside. So, okay, before I shift to the sorry for that. Before I shift to the to Emmanuel's comment regarding Nasdaq and Dow Jones, allow me to explain a bit the dollar strength. Okay, first of all, it was a combo of things that have been held since Monday, I will say, basically since yesterday after the Bank of Japan announcement. Okay, so it's a combo of things. So it is the anticipation of the Fed, not regarding the interest rate hikes. Okay, the markets are already pricing is 98%, presenting that the implied Fed futures suggest that 98% will be on hold. It's something that actually Mr. Powell confirmed last time with his comments. But the key question today is how long they will hold rates high. So what I mean, guys, right now, what matters is not whether they will hold rate or not today. They will. This is what is expected. It's largely well pricing that they will hold rates unchanged today, and it has been and there is a lot of chance for one rate hike. Actually, they stated it, one rate hike within the year, but these scenarios have been overshadowed by the key question, which is how long Fed and in general the central banks will hold rates high. Because we keep seeing, based on the data, based on the Middle East crisis, and based on the jobs, on the labor market as well, we keep seeing the scenarios of cutting interest rates be postponed and postponed and pushed back and pushed back. Initially, it was in the first half of the 2024. Now has been shifted to the second, and then it was shifted to the second half of 2024. Now has been shifted to the last quarter of the 2024. So this is where the attention turns. So in regards to the dollar, let me zoom in the 4-hour chart. Okay, so largely supported by the Bank of Japan. Okay, it's less than a hawkish tweak, and the rate differentials that this has actually caused. However, hi Nishta, hi everyone, hi Christiana, hi Tijuale. So as I was saying, that was a number of reasons. As I said, it was the less than hawkish Bank of Japan in this the absence of a real tweak in the policy, but nonetheless the rate differentials, the hotter inflation. Let's not forget that. That they keep on the cards that one possible rate hike within the year, but also is the Treasury's announcement, the Treasury supply, which actually I've seen earlier that, let me found it and I could possibly stick it on our question box over here. So the US Treasury actually announced a few minutes ago that it will increase the size of its debt auction, okay, in the upcoming quarter. So it refers to the possibly this quarter and the first quarter of 2024 as well, and etc. But at a more moderate, as they said, pace in longer dated bonds. And this is something that has caused a dramatic rise, not like today, but in recent weeks, okay? This moderate pace in the longer dated bonds has caused for the recent weeks, a dramatic rise in yields, okay? So in order to satisfy the borrowing needs, Treasury said it planned to increase the auction size of the 2 and 5 year notes by 3 billions per month. Okay, so this has helped, this deluge of supply has helped sending yields to the upside. 10 and 30-year yields are to the highest they have ever been in 16 years in November. So what else I wanted to add in regards to the to the dollar. Some say demand has been seen. So yields up, stocks were under pressure, open higher actually in the US Open just now, but dollar is holding its gains. I'm gonna get back to the Nasdaq in a bit. What those? Yeah. So let's take it one by one now. Okay. I'm not gonna. Let's get back to the dollar. Okay. Just remember this 10. Okay, it's actually 106.95, but let's round it up. The 107 territory. It will signal the break not only of a round number, which is the 107, but the 50% retracement level of the downleg that we have seen since last year, this huge downleg that we have seen in 2022. Okay, so it could open the doors further to the upside. 61.8 Fibonacci level is far away still. It's up to 108, 109 level, but immediate resistance can be seen at the 107.30 territory, and halfway between the resistance, the two levels. So that should be somewhere between. Let me just be precise. Halfway is down to 107. Let me be precise. Can't be precise, Andrea. 107. No, it's not on. Let me just. I'll put it in there. Let me be precise. Come on, Andrea. Yeah, 85. 107.85. Okay. What do you mean, Ibu? What do you mean with this comment? Where is tough? Tough? To hear me, that you have some sound issues. Sorry, I don't get it. Okay, so until Ibu replies, I'm gonna get back to Manuel because I talked him for long. So let's get back to the markets. Let's get back to the stock market, because we have seen a reversal the last 2 hours. Stocks have been appreciated a bit, especially this is S&P 500, my dear friends, in 1 hour chart. So there are some gains on the seen the last 2 hours. Okay, last hour and a half to be more precise. So stocks were in red, in green, sorry, at the open. So there's some kind of a digestion coming, digestion of the announcement on treasuries. This is the announcement that I just mentioned, that I just clarified that the US Treasury announced that it will continue to increase size of debt auctions, is what has supported the stock markets. Okay, guys, because you understand the issuance of bonds, okay, is something that signals something that is positive for stocks, but negative for yields. So yields have reversed lower the last 2 hours. Yeah, Nasdaq over here. Let me just extended higher, broken my 42 level, 4200s. That was a very important, it is actually still a very important level. Why? Because it's a round number. Also, it's also, let me just zoom out. So I want to show you, actually, I'm going to get back to the daily chart, because it could signal a rebound back up to 4,300. For the time being, what we are seeing is that the assets, the stocks, and in this case, it's the S&P 500, is for the third day in a row to the upside. I have a double channel over here, as you might have seen. And the reason for that is because I have a wider support and resistance area. And if you focus over here, this is the 4,200. Okay, I put it on purpose. Why? Because it used to be a very strong resistance level, a round number as well, and a gap down last week. So this has broken, okay, indicating also the break of this area over here of my support area that I had, okay, cross above it, flirts, retest the 50% retracement level since the up leg that we have seen the whole year, okay, but we still need a confirmed closure today above the 50% retracement level in order to indicate that it could come back to the mid area. So that should be somewhere around 42.90. So 200-day moving average stands at 42.75. So 42.75 to 42.90 territory. This is the next immediate resistance level. If the asset confirms tonight a closure above the 50% retracement level. So we might see the asset. You remember, every rebound in a channel indicates a possible retest of the midpoint, okay, of the channel, while a break of the midpoint indicates a possible retest of the upper resistance of the channel. So that would be if we see the asset crossing above the midline, which is this one, then the doors could open to the top line of my channel, which coincides also with the I think this is my 50, yeah, with my 50-day moving average as well. Okay, but still overall, it's in stock markets, USA 500 is under an overall negative outlook in the medium and long term. But this bounce could indicate the creation, the formation of another lower high, and so on and so forth. Let's move on. So Nasdaq and Dow. Okay, this is Dow Jones. You mentioned 4-hour chart. Just a second. Before we move on to the 4-hour chart, I would like to show you something manual. Something that you might have already seen is this bearish cross of the 50 and 200-day moving average at 33,930. Okay, momentum remains negative, a bit steady, a bit. Let me just. Okay, here we are. You see a bit. It's a bit steady, a bit no lower lows yet, etc. A bit steady, but still largely in red. Same for RSI, recover some losses, but still well below 50, flatten, indicating that this rally might be short-lived. Now let's zoom into the 4-hour chart, like Emmanuel requested. But again, sorry for that. I cannot help it, but this looks to me this was a neckline for me. This area over here, it was a neckline of somehow a head and shoulder formation, which was broken, corrected higher. They couldn't hold it for long and open another drift to the downside. So overall, we still remain under pressure with indication, with any bounce looking to be limited or a correction of the so far down channel that we have seen since June in stocks. So let me just, okay, so 4-hour chart. Okay, here we are. Let me just, everything set properly. Emmanuel, what I can see over here is a lack of direction ahead of the Fed. Look at that. RSI stack, right? Okay, it points slightly higher right now, but it has been consolidated at 50 zone for the whole day. Actually, not the whole day. What am I saying? Since Friday? Since Monday. So yeah, a lot of sideways move. Retested twice so far the 33,215 territory. It is retesting right now. MACD is at 0, so another indication of an indecision. So, and that's quite logical if we consider that we have ahead of ourselves the press conference and the Fed decision. So the 33,300 territory, 315 territory remains a key resistance level to be broken. And if that happens, the next resistance area to be seen, it would be these triple swing highs over here, around 33,440 territory. But there is more of a bearish pressure than bullish. So this is the 1-hour chart, which is with the MACD keep moving lower and lower. The same for MACD. Okay, MACD keeps moving lower and lower and lower. RSI neutral again, actually consolidating, swings up and high within 50 to 60 territory. So yeah, the bulls are in control the last 2 hours, but it looks that this is just limited bounce. Okay, hopefully this helps. So now what else I wanted to mention over here? Okay, Nasdaq over here. Let's move on to Nasdaq, guys. This is your session. Like Emmanuel, you can ask me anything you want. Okay, I'm here to help. Let me know what the asset you want me to cover, and I will do my best. Okay, so similar with Nasdaq. I think Nasdaq has suffered the most in October, if I'm not mistaken. I have a note somewhere. In general, guys, keep in mind that the stocks, especially the US indices, poised for the worst October in 5 years. Okay, so nonetheless, let's stick to, let's see here, it's a poor price analysis just for diversification. Okay, so here is what we have. The asset, this is a 4-hour chart. Okay, a rounding bottom over here. Okay, I will focus on that one. Rounding bottom, rounding top, oh sorry, rounding top, extending down, start rising since last week. Let me amend my standard deviation now to satisfy the asset. Extended higher, bridge and broken, completed the gap, bridge and broken mine, the neckline of the rounding top. Okay, here's the rounding top. Remember, rounding top is a bearish pattern, right? So for anyone that it was lucky enough to notice the rounding top last week, I guess anyone that noticed it again on the speculation of on the anticipation of further decline, which was down to 14,150 territory. Nonetheless, since then, let me just zoom in a bit. We have seen some kind of a narrow, pretty narrow, I would say, channel. And let me hide the comment just to be the chart to be clear. Okay, so yeah, hide it. Sorry, narrow, narrow. As I said, narrow channel, but still in a channel. Okay, still in a channel. Broken my my neckline. So I'm gonna add. So it should be somewhere around the 61.8 Fibonacci level. No, it's halfway. Halfway. Okay, so still 14,650 is still the next resistance level. But, guys, it already breached the top of the channel. So theoretically, we need a correction over here. So I will zoom in on the hourly chart, okay, to see what's going on. We have another 2 minutes until this candle close, okay, because I would like to see whether reversal will start on the based on the fact that it was the top of the channel was breached, a correction is needed, it looks to be overbought, and so on and so forth. Okay, so 2 minutes to go until the closure of this candle. And by the way, in 2 minutes we're gonna also have the JOLTS job opening, the ISM manufacturing PMI. Yeah, something that could, even though it's no longer a reliable indicator for an FP, but let's wait and see. I forgot to mention earlier the ADP, but let's take it step by step. So, and dear Emmanuel, still, okay, obviously, a confirmed closure above the 50% retracement level could open the doors to the 61.8 Fibonacci level. But because it has been seen in a channel, until it breached that level, we need to see that the channel remains intact. So what I mean, so that could, if indeed, that could take time. Do you get what I mean? So over here, it looks a bit over bought, so correction might be needed, but because it's ahead of the Fed and a lot of volatility is expected, be very careful. Okay, the data are out. Let me zoom in. Okay, what's going on? Already down. Let me see the data, guys. Let me share the data with you as well. Wait a minute. I'm gonna have a look on dollar CAD as well, something that I was watching since 2 weeks ago. So, friends, jobs are out. Let me refresh the calendar and let's see together why Nasdaq over here started pulling back, even though, as I said, it was overbought. Okay, correction is needed. That's why, Emmanuel, be careful. You mentioned 4-hour charts, but it's still in a channel. It breached the top of the channel, so we might need a correction at least halfway, which that means 14,500 territory. Okay, or even lower down to the 14,445. So jobs are out. Oops, what have I done? Refresh, come on. I have filters. Sorry guys, just a second. I selected something wrong apparently. Coordinated, come on, come on, come on. Okay, what happened over here? All save, apply. So, okay, Bloomberg, breaking news. US October ISM Manufacturing Index falls to 46.7 from 49 expected. Okay, I don't know what's going on with the calendar right now. I'll check later on and I will inform my colleagues from IT devs. I cannot see the results right now. Okay, I'm gonna let them know. But ISM manufacturing fell, jobs openings beat expectations. Okay, that's huge. I will get back to the dollar. I'm sorry, but I want to get back to the dollar because that's calling for that's not positive at all. The fact that jobs rose today, guys, is adding further boost on NFP on Friday. The fact that ISM dip, okay, and the fact that it remains below contraction is adding further to a possible recession in the US, because so far we keep saying, oh, US might avoid a recession, everything looks good, there is a slow growth, except from jobs and so on and so forth. But the fact that manufacturing contrasts once again it's bringing back. Okay, so it's the manufacturing that it's slowing down again, and the flip side, the strong jobs, which is actually the most important indicator that we have for any possible upcoming recession in the US. I was reading earlier in the morning a very nice briefing from Bloomberg. Mark, it was the analyst that was doing it, and he showed all the recessions of the last 13 years. Can I check if I can share it with you? And in all the recessions, in all the last 13 recessions, compared with the job losses, okay, there was no false signal. And that is what is actually adding concerns, concerns regarding the fact that can I find it there somewhere? I can't find it. I will try to do it while we are live, but I don't want to waste your time. So this, you can see that the market over here is undecisive, and the reason for that is, from the one hand, okay, from the one side, we had the Treasury's announcement that supported further the dollar. Now on the flip side, we are seeing that the stocks, the jobs keep rising, something that indicates another gain on NFP on Friday. And on the other side, we had ISM manufacturing, which indicates slowdown in the manufacturing sector and construction sector, but mainly on the manufacturing sector. So a very mixed US data coming out, something that's at concerns and possibly actually increasing further the odds of a rate hike in December or January. So yeah, so difficult market conditions apparently. Still, the area that I showed earlier remains a very strong barrier to be broken. The asset put back down on the announcement. Okay, so the area, let me just turn the dollar index into actually I want to save this format just to have it ready for tomorrow. But I know that you might be asking stuff. I'm gonna check the questions in a minute. I want to just okay, I want to just get the 1 hour chart to see what's really happening. Here we are, extended to the first resistance of the day, turned down, very a lot of indecision, I'm afraid. So because there is a lot of indecision after the data, but not because of the data support further boost on dollar on the belief of another rate hike, on the increase of odds for another rate hike. But because we are just few hours ahead of the Fed, the market remains cautious, and that's why we have seen this pullback. Okay, it could possibly stay within the range, because I can see a lot of sideways signals over here. RSI back to 57, very narrow slope. Okay, so it could stay back to the 50 zone back again, like it has been for 2 days in a row right now. Nasdaq also, MACD sort of also flattened. This is something that happened since yesterday, so for 2 days in a row. Sorry, no, what am I saying? Sorry, since yesterday afternoon, to be precise. Since yesterday afternoon, here we are. Since 6 o'clock Cyprus time, yesterday. Narrow, sideways. So it was on the US closure and Asia open, supported on the European session, but pulling back down. So it could remain unchanged within this area until the Fed is out. You can see that the moving averages have flattened. My fast moving average, the ones that I use for 1 hour and 30 minute charts, have flattened. Bollinger's also flattened. So a lot of consolidation is expected. Okay, a lot of consolidation. Let me get back to the questions. Dollar CAD, something that I was watching since was definitely a week ago. Don't remember whether I spotted that break in September, but I spotted definitely this break over here in 2 weeks ago. So, dear friend Nabi, overall, dollar CAD is in a bullish bias. You can see that MACDs keep rising for the whole October and so far. Okay, so keep rising. Here we are. We had a very nice, decisive breakout of triangle. It's not ascending, it's a bit flat. Of triangle seen in the long term since August 2022. Broken it, extended above the 61 Fibonacci level, 100 actually 61 Fibonacci level on the last 6 months, no, 4 months performance. So this 61 and 100 Fibonacci level has been placed on this latest swing, on the swing from July up to August and then down in September. Okay, I will show you a quick weekly chart. It might make more sense to you. This is when I spotted it. Boom, boom. Retest, actually started the rebound, retested the top of the triangle. This is the weekly dollar cat. Reverted, didn't manage to sustain a move above it, corrected again, but with a higher low, as you can see. That was the very first indication that we have a channel, but also there is a rising, increasing bullish bias until it finally broken it. Okay, but quickly turned and closed below that, so that wasn't sufficient enough. Retested for 3 weeks in a row until it finally extended the closure above it last week, 2 weeks ago, and the final signal was here of last week's increase that confirmed the medium-term rally for dollar cat, with immediate resistance level lying at 139 and 139.60 territory, 139.50 to be precise, and 139.50 somewhere here. So that takes us back to the August highs, but also is a key resistance area between our immediate Fibonacci expansions, the 100 Fibonacci expansions. A breakout above that level could open the doors to years highs, and I'm referring to 140, 141, 142 area that are historical levels that we have seen back in 2015, back in the pandemic years, 2020, and so on and so forth. So overall, in a positive outlook since June, late June, with the expectation to breach the 139.50 level still on the cards. A bit of a consolidation has been seen the last 3 days, but holding gains. Momentum is rising, so there is further steam to the upside, my dear friend, at least in the medium term. Intraday now. Okay, intraday now. I have I have put on by the 1 hour chart. Here we are. I have used, this is my short-term moving average. I have used an 8, and if I'm going to 5, 8 and 5 in this case, an 8 and 5 exponential moving average, in which you can see that is pointing sharply to the downside. So intraday we have some selling pressure, especially after the broken that immediate floor that has been seen since yesterday. So it got down, broken it, extended below it. There is a lot of bearish demand, as you can see, because look at these long tails. These long tails at the top of the candles indicate that even though bulls try to push the price higher, the bears are in control, and they managed to close the last 2 hours. In a bearish closure, having a bearish closure. I will move on to the 30-minute chart just to see what's going on. Boom, down, gap down. There is a bit of a further selling pressure still. The next immediate intraday resistance level, support level, still is at these latest swing highs that we have seen on Monday. 138.48 territory. If that breaks, then that could turn attention to the 138.15 level. Let me use the Fibonacci levels, are very, very helpful on any swings, right? So this was broken already. Yeah, look at that. This is relying, and this is satisfied the fact that this is a very strong support level intraday, at least, because it's not only the latest swing highs, it's also the 161 Fibonacci level on this latest swing low. Okay. Okay. So what else? What else? What else? Let me check my ATR as well, since we are in a fast environment and I'm referring to the 1 hour chart. There are not 13.9. Why in the 4 hour is not on 28? So that should be somewhere 28, somewhere here at 138.30. 138.30. 138.30. Very, very briefly, very, yeah. So key immediate support levels, I have posted that on. Obviously to the upside, the latest swing high. So this one and this one, will this one be a very crucial one, because it was tested several times today and the whole week. So this remained a very strong resistance level to the upside, because it could alert the resumption of the uptrend that we discussed earlier in regards to the medium and long term. Hopefully this is clear, Navi. Euro dollar, sure. Let me see the Bloomberg. What matters more to the bond market, Yellen or Powell? Tonight's sessions will tell, actually, who matters the most, whether it's Yellen, not Wellen, Yellen, Mr. Yellen, the Treasury President, the Treasury Secretary, or Mr. Powell, the President of Fed. Now, Euro dollar, so there was a pullback of dollar on the data, so that's why we've seen a correction as well. A correction, short-lived one. Okay, this is the hourly chart. Okay, so let me put the intraday setup. Sorry for that. I want to keep that on. Where's my? Okay, so intraday, this is a 30 minutes chart again for very short time frames. There is a gap up in the US Open, obviously due to this small correction that we had so far for a dollar. This is dollar move and not the euro weakness. Sorry, this is dollar weakness and not the euro strength. Okay. What can I say? Still very close to the peak. The support of the day, well, far away from the pivot point, remains to the downside. MACD negative, RSI still below 50. There was a spike, but still below 50. Stochastic also posted a bullish cross, but will it last? It doesn't look likely, because already the Bollinger started to shrink. Okay. So the day's range remains the day's barriers, the top and the bottom line, the top and the bottom, the high and the low of the day remains the strong resistance and support levels. So as long as it doesn't break above the day's high, there is no indication about a return back to 106, 106.50 territory. Overall remains under pressure, still under pressure. Is a very it has been a very sharp selling since yesterday. So these bounce higher just on the data. Looks short-lived. Yeah. What I want you to stick on, guys, is on the fact here. This is the daily chart. Okay. That the dollar is actually ranging. Let me fix this one. Nice and easy. It has been in a uptrend, like a pennant, but a bearish pennant. Okay, bearish pattern, because it has been in a downtrend for months. So this pennant is a bearish pattern. Pennant, I cannot pronounce it properly. Actually, it's a bearish flag, I should say. It's not a pennant. Let me double check. Yeah, it looks to be a bearish flag. Yeah, flag. So broken the long-term channel, extended higher, short-lived, didn't manage to recover more than 30%, 25% of the overall down leg. Quickly the next day in a sell-off, return back to the top of the channel. Okay, try to recover, and it's moving sideways for 1, 2, 3, 4, 5, 6 days in a row. No, more than 6 days in a row. So sorry, 4. I just had 2. So that's nearly for more than 2 weeks, isn't it? For 2 weeks sideways. Okay, 2 weeks sideways. And considering that the momentum remains largely in red for euro dollar, the asset, we're just waiting to see whether we're going to have any sufficient breakout of this channel to the downside, the return to the long-term rally, to the long-term downtrend, in order to indicate that we are back in trend, with possibility to move down even to parity. But that's way far away. So for the time being, keep an eye on this formation, these formations that I have put on. They might help you, especially with the weekly closures. And if I move on to the 1-hour chart, just to help you a bit with some intraday trading, as you can see, the moving average haven't really crossed. Let me just go down to the 30-minute chart. Yes, moving averages are extending higher, but they have not bullishly crossed. MACD is negative. RSI retest 50. So yeah, but no, yeah, retest 50. So there is some sting to the upside, possibly to the day's highs, but that's pretty much it. Everything support an overall pressure with this bounce to be short-lived up to the high of the day. Okay. Oh, Bitcoin. So we have, I don't know the name, dollar bulls and Bitcoin sell. Let's see. Let me get back to the dollar again to see whether something new happened. Lot of volatility. So keeps remains in a pullback. This is the 30-minute chart, so still 106.47 is on the cards. The low of the day is still. So basically, this drift lower, okay, turns into could find support at 105, 106.47, or even 106.30, which is the pivot point of the day. Bitcoin. But as I said, dollar, guys, is not really, is still well supported. Well supported, okay? So Bitcoin, what we have? Bitcoin sell. I don't think that's the case, my dear friend. There is some selling pressure here, but it was on the data announcement. It's more of a volatility than an actual direction. Be careful, guys, okay? Be very careful. Overall, it has been to 35,000, well above 35,000, actually, back to nearly 2 years, actually 18 months highs. Momentum is bullish. You see my RSI in the daily chart keep rising. It looks a bit, it's at the 77 level. It looks a bit, it has entered the overbought territory, but still holding gains, corrected a bit, indicating that there is further steam to the upside. Bitcoin overall is in a positive outlook with the 38.2 Fibonacci level, if it breaks, obviously, to open the doors to 43, even 50 areas. Intraday, it's a lot of consolidation. Nothing else than that. It's just consolidating. I agree that there is some sell-off, but that was on the data. And now it's just stuck. It's not, no, it's not, nothing to be considered as a sell-off or something. Let me check the calendar and the Bloomberg, whether there is anything that I'm missing. I've missed. Guys, I'm gonna shortly call it a day. So any questions that you have, now is the time to let me know. Okay. So we mentioned there's ISM. We mentioned jobs. Let me check what's going on here. So anything missed? I think not. Before we call it a day, though, I would like to sum up what is expected for tonight and how it could possibly affect the dollar, the market in general. Okay, so let me check the questions once again. No questions so far. Okay, no further questions. Okay, so we are just 4 hours or less than 4 hours away from the Fed announcement. Okay, so we have seen on the data the dollar actually 1 hour ahead of the data and ahead of the Fed to be supported, but a pullback has been seen on the data, which actually, as I mentioned earlier, they are adding further pressure on the Fed, increasing odds for a rate hike, for another rate hike within the year, and actually, and the disappointing data provide some kind of a conflicting, let's say, signals, conflicting signals regarding to the U.S. economy, because we've seen the growth decline, slowdown. Growth in a slowdown, inflation still really high, jobs really solid and strong still. So a lot of conflicting signals. A And let's not forget the treasuries. That is what initially supported the sorry, supported the dollar. Whew. So, what else I wanted to mention? So, dollar in a pullback, okay, in the US Open. Stocks, let's get to NASDAQ. Stocks rose, okay, overextended, already breached, oh my God, already breached my 61.8 Fibonacci level. So it's definitely overbought outside the channel, something that indicates that it needs a correction. That's massive. That's massive. And that's definitely massive. So it needs to be corrected. But will this be corrected during the Fed, ahead of the Fed? Not at all. So it was breached and broken. It was breached, not broken. Sorry, not broken. So what we have over here is a move higher. Let me correct this. So you need to keep an eye on any correction signals, guys. Any corrections, either in your 1 hour chart, actually possibly on the 30 minutes chart. It's overbought for sure, but we need to see a correction. We need to see a reversal in order to suggest that it will get back down. Sorry. Let me check what else is going on. Maybe I have missed something. Treasury yields, 30-year one fell. So what else is going on? Let me quickly check. No, nothing really, nothing other than that. Okay. Any questions? Any further questions before I call it a day? Actually, we don't have anything from Middle East for the time being. Let me check the chart. What about gold? Oh, sorry, I forgot gold. So I'm not sure. Actually, yeah, it wasn't. I had a webinar yesterday explaining, actually checking with the team over there, with the team that attended the gold. So guys, okay, or everything that we have seen from gold, even this pullback that we have seen the last 2 days down to 1975 territory, okay, it's just the market being cautious ahead of the Fed. Like, okay, so there is some easing in the haven flows. Some technicals. It was the month's end, so today's a new day, the very first day of November. These two were the last 2 working days of October. So I cautious ahead of the Fed. Technical correction also supported this pullback. It was also supported by the fact that the World Gold Council flagged ongoing strong demand from China. This announcement, the fact that the World Gold Council announced strong demand from China, is something that should keep a floor. So should keep the gold supported. Okay? So should keep the floor the gold supported. Along obviously with the geopolitics, which if we see any further escalation, they will bring back the haven flows back to the gold. So immediate floor, okay, immediate floor is down to here 1960. Just perfectly satisfied, as you can see, by my 20.3 Fibonacci level. And also, out of curiosity, I'm gonna put this swing low, latest swing low. Okay, not brilliant, but provides, okay. Still, why not? It could be used in the very short time frame, such as the 1 hour chart. So immediate support for you guys, for anyone that is scalping, is in an intraday trader, is the 1982 territory, which coincides with the 20 moving average and the 61.8 Fibonacci level. So this is the immediate support day, a support level, immediate support level. Why in the long term fundamental support gold show the 1960 level, 1960 territory. It's the strongest support level that we have. So only if the gold turns below that level, then only if that happens, we could the outlook could change into a bearish one. But look at this beauty. It has been a rally. MACD keeps rising. Momentum keeps rising. Fundamental, as I explained, support the gold still. Bullish cross of 50. Let me get out all this. Bullish cross of 20 above 50. Bullish cross above 50 above 200. Bullish cross of 20 above 200 as well. So all indicate to immediate and medium-term support for gold, with indication to get back to 2000 highs, and even the areas that have been seen the last 3 years, and I'm referring to let me just be precise, 275, far away from it yet, but that, or 2060, but this is the medium and long term. Okay, any further questions, Nabi, regarding gold, or are you okay with it? So intraday bounce, broken pivot point 1991. Okay, there is some consolidation. Okay, there is not a lot of steam to the upside still. Let me check the 30 minutes chart to be precise. So, okay, they keep pointing higher. MACD, so bullish cross of stochastic. So there is still further room to the upside in the very, very short time frame. This is a 30 minutes channel. So yeah, yeah, that's it. Guys, if you have no further questions, I'm gonna call it a date. Before I go, just to remind you that tonight the FOMC resumes its meeting and will announce the decision in less than 4 hours from now. The interest rates might not affect the market significantly, especially if they don't surprise the market and they came unchanged, as is widely largely expected pricing for many weeks now. The attention is on the Powell, on Mr. Powell in the press conference. We don't expect any drama, okay? No, we don't expect any drama. But if this sounded a hawkish hold, like the last, like in the last meetings, like last remarks that we have seen from officials, it could. Let me get back to the dollar. Sorry. Okay, here's the dollar. Let me just zoom out. It could provide further support for dollar. If they surprise though, and they sound more less hawkish or even dovish than what was expected, then we might, or even if they mention the rates cuts and any possible time frame when that will happen, this is something that could add dollar in a sell-off. Everything depends on what Mr. Powell will mention in his press conference tonight. Even though it's expected to lack of drama, it doesn't expect to surprise at all. So because things are quite clear, labor market is still tight. Obviously, what matters is to see the NFP on Friday. The data, they don't give any room to policymakers to pause or at least to declare victory too soon. So it is what it is. Yeah, they expected to just be repeat themselves, and saying that they will do whatever is necessary and appropriate, and so on and so forth. Okay. Okay, dollar decline pullback actually extends. We have a bearish cross of dollar index over here, in the dollar index over here from my fast moving average. So now the focus turns back to the pivot point, even though still it's still within the Bollingers, within the Bollingers area. So there is still some room to the downside if you see stochastic, and you cannot see. Yeah, if you can see stochastic over here, still there is some room to the downside. Maybe for short-term traders, there is still some room down to 106.40 or even 106.29, which is the pivot point. So keep an eye on that. So that's it from me, guys. Take care. It seems that it's rally time for stocks. Remember what I told you earlier about NASDAQ and the resistance areas. Sorry, S&P 500, NASDAQ, and Dow Jones in the resistance areas. It's all systems go. It's all systems goes for bond and stock bulls today, mainly as a relief trade. Okay, after a really hard October. Also due to the Treasury's announcements. So yeah, so it is what it is. Thank you very much. Have a great day ahead. Take care. Please, 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 please be careful tonight with the press conference, and I'm gonna see you again within the week. Thank you very much. Have a great day ahead. Bye-bye.